August 16, 2026. The banks are finally buying, the regulators are still fumbling, and one wallet company just handed out 40,000 home addresses. Let's go. Quick shout out to today's sponsor Compete Token, the gaming crypto that actually has real games you can play right now. Link in the description. Paul Tudor Jones just flipped bullish on Bitcoin again. The billionaire macro traders firm spent an entire year quietly selling down its BlackRock Bitcoin ETF stake and just reversed course and started buying it back. When a guy who's been trading since the 80s starts accumulating, old money followers notice. Tudor Jones has been publicly pro-Bitcoin for years, so him topping up isn't a shock, but the timing is. He sold the top, and now he's buying. That's not a hobbyist, that's a signal. And speaking of old money finally getting it, UBS just cranked its Bitcoin bets 24 times higher. The biggest bank in Switzerland grew its Bitcoin ETF call option exposure by a factor of 24 in a single filing period. Calls are directional upside bets. You don't buy calls if you think price is going sideways. You buy calls when you think something is about to rip. UBS, the same bank that used to publish Bitcoin has no intrinsic value, research notes, is now positioned for a pump. Beautiful. Crypto wallet SafePal just leaked 40,000 customers. The hardware wallet maker disclosed a data breach that exposed order info, names, addresses, phone numbers for nearly 40,000 buyers. Funds are reportedly safe, but if you bought a hardware wallet from SafePal, congratulations, your home address is now a shopping list for wrench attacks. This is exactly why you don't dox your own Bitcoin buying customers, and exactly why buying hardware wallets in your real name has always been a little questionable. Galaxy Digital just slashed the odds of the biggest crypto bill in Washington to 10%. Galaxy's research desk cut the probability of the Clarity Act passing this Congress from a coin flip down to 1 in 10. The Clarity Act is the industry's cleanest shot at actual US market structure rules, the thing everyone's been begging for since 2018. And Congress is once again eating its own homework. Every year the same story, bipartisan support, close to the finish line, then Washington finds a way to blow it. Washington State just nuked Kalshi's prediction markets. State regulators ordered the platform to halt a broad range of prediction contracts inside state lines. Every single time a prediction market catches fire, some state regulator sprints out to unplug the Ethernet cable. Prediction markets are, by every academic study ever done, more accurate than pundits. So of course, they must be stopped. Can't have people betting on truth. Kazakhstan just shut down Bitcoin mining in its own capital city. The number 2 country in global Bitcoin hash rate is pulling the plug on rigs operating in the capital, blaming grid strain. Here's the thing about hash rate, it's nomadic. If Kazakhstan doesn't want it, Paraguay does, Ethiopia does, Texas definitely does. The fleet just packs up and moves to the next cheap electricity jurisdiction, and the network doesn't blink. Tokenized stockholders just doubled overnight. The number of wallets holding tokenized public equities more than doubled in a single month, and monthly trading volume ripped higher right alongside it. Turns out people like being able to buy Apple at 3 in the morning on a Sunday, 24/7 markets, instant settlement, no broker gatekeeping. This is what stocks were always supposed to be. Wall Street had 100 years to fix trading hours and never did. Crypto did it in a weekend. An analyst just declared $1 million Bitcoin mathematically impossible. Marcus Thielen from 10x Research went on record saying Bitcoin reaching $1 million by 2030 cannot happen. The math, he says, doesn't work. Every single cycle, a new analyst grabs a spreadsheet, does math on the last cycle, and declares the next cycle cancelled. Bitcoin at 10,000 was mathematically impossible. Bitcoin at 100,000 was mathematically impossible. We'll see how this one ages. Europe's crypto law is now fueling a scam wave. The EU's My Car framework was supposed to sanitize the market. Instead, users are getting pushed toward unlicensed offshore fronts that pretend to be my car compliant. Regulators forgot the first law of crypto scams. They root around damage. You ban the legit players, users don't stop trading, they just get funneled to shadier ones. My car didn't clean up crypto, it just moved the mess to a jurisdiction the EU can't touch. Bybit just listed perpetuals on a pre-IPO robot company. The exchange added leveraged perps on robot maker Unitree and AI lab Moonshot, neither of which has even hit the public market yet. So crypto exchanges are now offering leverage on companies your broker legally can't even show you. This is the whole pitch. The old system decides what you can trade and when. Crypto decides, yes. The gap between what's possible on-chain and what's legal off-chain gets more absurd every week. And one more shout-out to today's sponsor Compete Token, the gaming crypto with real games. Links in the description. That's the news. Like, subscribe, and I'll see you tomorrow.